Hey people, do you like to save some taxes? No, I'm not talking about ATC, ATD, HRA, LTA and all of that boring stuff which we have been doing for years and for years. This is way different. Imagine a car can help you save taxes. Yes, that is what this video is going to be all about. And my name is Akash, a CFP for over 12 years, and I help people save tons and tons of taxes, and I also help them save money. So let's get rolling. So friends, how many of you have noticed this car? Way back in 2001, you saw these mostly in metropolitan cities like Bangalore, Chennai, Bombay, New Delhi and all of that. Quite a pretty one, right? Small, funny, made many of them smile. The best thing is this is an electric vehicle and it was best used for in-city driving. What happened next is all of this climate change, high fuel prices, better technology came in, and companies started manufacturing more of electric vehicles. In India, almost each manufacturer has his own electric vehicle on offer. So the government thought, oh yeah, why not look towards a greener world? Why not offer incentives? Why not offer benefits to those who purchase this electric vehicle to increase the consumption, to increase the demand of electric vehicles? And that is how Section 80EEB was born, and today it's 1 year old. So friends, what is Section 80EEB? So if you buy an electric vehicle on a car loan, you can claim tax deduction on the interest paid up to 1,50,000 rupees every year until the closure of the loan. Now, do remember that this is not applicable for HUFs or for companies. This is only applicable to individuals. Those individuals could be salaried individuals, you could be business individuals, any individual can take advantage of this Section 80EEB. And do remember that this is not among the ATC, ATD or the Chapter 6A deductions. This is completely independent of those Chapter 6A deductions. So let's say you are already claiming 1,50,000 of ATC. You can claim additional 1,50,000 in 80EEB if you have a loan and if you have purchased an electric vehicle using that loan. Now this scheme is going to has already started from the 1st April 2019 to the 31st of March 2023. So any vehicle bought during this period is eligible for deduction under 80EEB. Now you may ask, how do we benefit from this electric vehicle purchase? There are two major benefits that you get. One is reduced taxes in GST. A regular car, depending on its size, the taxes start from about 28% and they go up to 45% if it's an ultra luxury vehicle. But whereas for electric vehicles, the GST is capped at only 5%. So which means you pay lower taxes even in GST. That's one benefit. The second benefit is the interest that you can claim for tax deduction. Now, of course, that depends on your level of income. The higher your income, the more benefit that you'll be able to choose. Let's quickly look at an example. So we have taken two cars purely for comparison purposes. One is the Tata Nexon EV and the other one is the Hyundai Kona EV. The on-road price of these vehicles is about 15.91 lakhs for Tata Nexon and 26.32 lakhs for Hyundai Kona. And if your interest rate is going to be 8.5% and if the tenure is going to be 5 years, for the Tata Nexon, you will end up paying about 2,94,000 rupees of interest over the period of 5 years. Whereas for Hyundai Kona, it is going to be 4,68,000 rupees of interest that you're going to be paying over those 5-year period. Now, the benefit here, as you can see, is in the interest that you pay, you're getting about 1.5 lakhs of benefit every year. For the Tata Nexon, depending on your income bracket, the savings of taxes differ. As you can see, it starts from 15,000 and odd rupees. The next is about 61,000, the next is about 91, 100k, and it goes up to 1,25,686 if you are in the highest income bracket. Whereas for the Hyundai Kona, it starts with about 25,000 and it goes up to 2,07,000 and odd rupees if you are on the highest bracket. Again, there is no denial that this is a very attractive scheme for those who have the disposable income, and people who earn above 1 crore are the ones who will save a lot of taxes. The two money stuff that you should know while buying a car are, one, what is the total cost of ownership? We all know that the on-road price of the vehicle is something, and then we also have the interest cost. If you are going to take a loan on the vehicle, you should also remember that the interest cost rises exponentially if the tenure of the vehicle or tenure of the loan is longer. So you should calculate the total ownership cost before making a purchase decision. The second that we should also know is the maintenance cost, or what we call as the running cost of the vehicle. So that again, it has two components. One, the annual maintenance cost of the vehicle as well as the fuel cost of the vehicle. The benefit with electric cars is your total cost of ownership is low because you get back a part of the interest that you pay as tax rebate, and second thing is your annual running costs are also lower, primarily because it uses electricity as a fuel as against petrol and diesel vehicles. So that is more money put into your pocket every month. So friends, let's quickly summarize. Does this mean that we should buy a car to just save taxes? No, absolutely not, right? We should buy something only if we need it. Point number one. Point number two, do remember the EMI rules. We spoke about it in our previous video. Those who haven't looked at it, this is where it is. And the third point is make sure it falls in line with your vision for your life. That's equally important. That video is here. So friends, what do you think? Are you going to take this deal? Let me know in the comment section below. And if you have any questions related to taxes, do ask them in the comment section below also, and I'll be glad to answer. To know more about taxes, wealth and money matters, please subscribe to this channel as well. Until our next video, tata, bye-bye.